Have you ever wondered why some individuals seem to pay less in taxes than others, even when their incomes are similar? Or perhaps you have heard friends talk about finding deductions to lower their tax bill. People actively seek out basic tax deductions because these deductions serve as a powerful and legitimate way to reduce their taxable income. By decreasing the amount of income subject to tax, they ultimately lower the overall tax amount they owe to the government. The core mechanism behind deductions is quite straightforward. The tax system allows for certain expenses and situations to be subtracted from your gross income, arriving at a lower adjusted gross income. This lower figure is what the government then uses to calculate your tax liability. For example, common basic deductions often include things like contributions to traditional retirement accounts, student loan interest, health savings account contributions, and even certain medical expenses if they exceed a specific percentage of your income. The government provides these deductions to incentivize certain behaviors, like saving for retirement or pursuing education, or to account for unavoidable expenses that reduce a person's ability to pay taxes. To effectively find and claim these deductions, individuals typically start by meticulously keeping records of all potentially deductible expenses throughout the year. This might include receipts for charitable donations, statements for mortgage interest paid, or documentation for educational expenses. When it comes time to file, many use tax preparation software, which guides them through potential deductions, or consult with a qualified tax professional who can identify all eligible deductions based on their unique financial situation. It is also important to understand the difference between the standard deduction and itemized deductions. Most taxpayers choose the standard deduction, which is a fixed amount set by the Internal Revenue Service and varies based on filing status. However, if you're eligible itemized deductions, like mortgage interest, state and local taxes up to a limit, and charitable contributions, add up to more than the standard deduction, then it usually makes financial sense to itemize. This choice is a key part of maximizing your tax savings. Ultimately, understanding and utilizing basic tax deductions is about smart financial planning and ensuring you only pay your fair share, nothing more. It empowers you to navigate the tax system confidently, allowing you to retain more of your hard-earned money for your personal savings, investments, or everyday needs.